Well, I wish I could sing. If I could, I'd give you a few bars of Britney Spears' "Oops, I Did It Again." The IMF downgraded its forecast for this year's growth for the fifth time. It now forecasts global growth this year will be the same 3.1% as that it was last year. The key line in the IMF's report for the foreign exchange market was that it said monetary stimulus should continue until the recovery is well established. Given that the U.S. is on its way to tapering off, that leaves the other central banks on easing mode, which difference would tend to underpin the dollar virtually across the board. The IMF's new prediction for this year's Eurozone growth of minus 0.6% is the same as the ECB's, but given the pattern of revisions, the likelihood is that growth undershoots even this rather undemanding target, and the ECB is forced to ease further, which in my view would be likely to weaken the euro. As for the UK, the IMF forecasts UK growth at 0.9% this year. That's a little bit below the Bank of England's 1.1% forecast, but not necessarily low enough to require further easing measures there. Now, against this background, the movements overnight were kind of difficult to understand. Why would the commodity currencies be the best performers when the main news story is the downgrade to global growth prospects? To make matters worse, China announced a worse fall in imports in June than in May, even though the markets had been expecting an increase. Yet the Canadian dollar, the Australian dollar, and the New Zealand dollar all gained, while the beleaguered South African rand was the best performing currency that we track. On the other hand, the Swiss franc was the biggest loser. The answer must be that investors are looking to the U.S., where corporate earnings are starting to come in and they're expected to exceed forecasts, and stocks just keep going up and up and up. That's a risk-on environment regardless of what the IMF says. That means the dollar is likely to gain further. However, I don't think the commodity currencies can sustain this sort of sentiment-based recovery while their economies weaken. And so I would use this rally in the economy, in the commodity currencies, to establish short positions. Now, the big event of the day is going to be the release of the minutes from the U.S. FOMC meeting of June 18th and 19th. We've heard so much from so many Fed officials recently that the minutes might not shed that much more light on the situation. The key will be the discussion on the risks around the Fed's growth outlook, which are in effect the risks around tapering off. Of particular interest will be any discussion about the employment situation and the falling participation rate. Now, Fed Chairman Bernanke will be speaking later in the day and may clear up any confusion ignited by the release of the minutes. Otherwise, no major U.S. indicators out today. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.